Morning. I just wanted to record a quick video about markets over the last couple of days. As you probably will have seen, there were some pretty steep drops in US stock markets Friday our time, and then overnight Friday our time, and then overnight Monday our time in America, followed by subsequent drops in the Australian share market. What's caused this was some really positive jobs data that was published in the US on Friday, which showed that there's been a big spike up in wages in America. Ordinarily, this would be seen as really good news. Big wages growth means there's more people earning money and they're out there spending it, and the economy ticks along. But what's likely to happen is that there may be a tick up in inflation in America, and as a result the US Fed may need to come out and increase interest rates at a much faster rate than what everyone was expecting. If rates go up, then that could slow down the recovery that we're seeing in the US, so there's a bit of worry about that. If rates start going up, the economy starts to slow down, and that doesn't mean great things for a lot of US companies. So people started to sell their shares. They started selling on Friday and then kind of continued doing that again on Monday. Now all of this could just prove to be a short-term blip, a short-term increase in wages. Recently the US has passed some tax cuts, and it could just be a result of the tax cuts that there's been a short-term spike up in wages. It could also be something a little bit more longer term. We won't know for a little while until some more numbers are published. So I've seen the US drop a bit over the last couple of days. The Australian stock market's dropped also, but certainly nowhere near as much as what America has. The Americans have had a huge run up in their stock markets over the last couple of years. Even after accounting for Friday's drop in the stock market, the US was up something like 20% for the year, even after the drop on Friday. That's probably something like 15% after the drop on Monday. And as I'm recording this morning, there's a lot of headlines being published saying that the US has now had the biggest surge in their stock market overnight in the last 15 months. So it's been down a fair bit in the last couple of days, but then also up significantly overnight last night. As you'll know from conversations we've been having with you over the last 6 months or so, we've been starting to get a little bit wary around the level of the US stock market. So we've slowed down or stopped investing any new money into the US stock market at the moment. And for some clients that already have a lot of exposure there, we've actually been starting to wind back on that. Given movements in the last couple of days, our view on that hasn't changed at all. As we will have discussed with you many times over the years, we encourage you not to be too concerned with short-term market movements up. For those of you still working, saving and investing, building up your investments, you'll know that we invest regularly over the course of the year, so that itself smooths out the ups and downs we see in markets. Sharp drops like we've seen in the last couple of days can provide an opportune time to invest in some quality businesses that may be a whole lot cheaper than what they were only a week ago. For those of you drawing in income from your investments, possibly via a pension from superannuation, you'll know that the way that we've set up your investments, it's mainly the income, interest, dividends that you're earning on your investments that's funding the pension that you're drawing down. You're not set up in a way that you're selling investments, so you can ride through the ups and downs that we've seen in the last couple of days. You're not selling your shares in these down markets to fund your pension payments. That's when the real damage is done to your portfolio. We've set aside enough money in cash and term deposits to see you through these short-term movements. An important thing to remember, share market might drop 2 or 3% in one day, but the dividends that are coming through, they're a whole lot more consistent than that. If you do have any worries about your investments, please don't hesitate to reach out. Happy to take a phone call or an email. I'm pleased to note though that over the last couple of days I haven't had any clients calling me worried and looking to sell all of their investments. Those that have reached out have actually been saying, what can we buy in these markets, and that's the way to be thinking about things. All the best, and I look forward to seeing you soon.